Hello students and good day to you all. Today is the 18th of December 2017 and this is our weekly market review for the current market status. Generally, first of all, we'll place the disclaimer in order for you to understand that at the moment we're talking about material that is suitable for our students. And if you're not familiar with the material, you're more than welcome to go to our website and read a bit more about our methods. In this weekly market analysis, we're going to talk about three different subjects. The first thing that we're going to cover will be the US dollar. Generally, I can say that it haven't really formed any formation at the moment, and I'd like to give small potential regarding the dollar, or let's say how to react to the current potential on behalf of the dollar. The second thing that we're going to cover will be the euro in front of the Australian dollar. That was a trade that we gave a week ago, and I want to cover the additional movement that occurred during the last week movement, and still with our expectation, what is our expectation regarding the continuance of this specific trend, and additional thing regarding the cryptocurrencies, the mining currencies, just explaining a bit about the flow that we can see right now in the market, and that might change a major perspective that we already had regarding the market. That might be changing according to the changes that we see on behalf of investments. So I'll cover that at the end of this session. First of all, let's go to our chart station, my trading station. And over here, again, just to cover the idea of the dollar, I'm going to talk about the dollar, looking at the euro in front of the US dollar. Just 1 second, let's fix the chart. Perfect. So regarding the dollar, first of all, let's look at the daily chart. We're looking at the euro in front of the US dollar. Obviously, a downtrend movement is a stronger dollar and vice versa. The potential that we talked about several weeks ago was to see a stronger euro in front of a weakening dollar. And indeed, at the beginning, the market climbed up very nicely, but since then it's been bouncing lower with a very frustrating, slow, choppy movement, not really moving toward our prediction with the confidence that we need in order for us to see that and mark that as profit and react to that. Just a bit about the way that we manage our trades. When we're already in a trade, it has a lot to do with the position of our account, not only regarding this specific trade, but also other trades that are open on our account. The money management process has a lot to do with the percentage, with the value that we took the trade, the leverage, and what is our expectation regarding this trade, and obviously what is the risk proportion that we took on this specific trade. For example, in this trade, looking at this uptrend movement, we had a stop loss at this territory over here. That was the logical stop loss. Now, once we're moving toward a higher rate, we're moving the stop loss to a higher position, meaning that the stop loss is approximately at this territory. So we haven't really reached that stop loss. The market did not penetrate this territory in order for it to close the position, but still we're fluctuating around this level, and it's a very disturbing position at the moment. So we've got some profit in this specific trade, but still it's a very small one because the market just went back to almost the entry point for this specific trade, and we might see this closing during this week, and we can still see a potential for an uptrend movement. But again, one of the basic laws in our perspective is that if the market is closing the position, we're not trying to rejoin this position, we're leaving the chart aside, and even if we made a substantial profit, still we're leaving the chart aside, placing it aside, because you don't understand how emotionally you're involved in the asset. You have a perspective which is based on emotions, and it's not based on facts. You're not clean with your perspective in order for you to analyze the market correctly. Talking about a specific asset. So what we're doing, even if we're profiting, still closing a position with a profit, we can't really proceed with additional trades on a specific asset, you'll find yourself trading toward the uptrend, for example, and closing a position with profits and then taking the other direction, expecting the market to move toward the other direction. That's not the right thing to do. That's the basic fact. I saw so many traders do the same mistake, and I advise you to leave the chart alone, allow it to express some movements, and then make an assessment later on. But right now, you can't really proceed with this specific trade. So regarding this asset, again, we're expecting the dollar to lose strength in the market. Right now, we've bounced back toward our entry point, and it's in a risky position. But again, we're very, very, very covered when it comes down to money management. So at the moment, I do not mind losing some pennies on this specific trade with the other potentials that we've got. So we've covered the dollar idea. Right now, I'd like to move on to the euro in front of the Australian dollar. Okay, so let's go back to the weekly chart. Just to remind you, what we said last week is that our perspective, because we've got a 5-wave movement over here, that's a 1, a 2, a 3, a 4, and a 5, and our expectation is to see 3 waves of a corrective pattern, which is an A, a B, and a C wave, before moving on and proceeding with additional 5 waves. So our assessment right now is to see a downtrend movement that will carry a downtrend movement toward the 12.8, 1.28. That was my assessment last week. In terms of measurement, it's very logical. So that was our assessment last week, and indeed, looking at the daily chart, we can see that the market indeed dropped down very nicely since the entry point that I've stated last week. We can see already just a bit more than 2% of a downtrend movement. That's enormous in terms of profit potential in 1 week. And our assessment is to see a continuance of that specific movement. Now, I've covered the potential in terms of the head and shoulders, the left shoulder, the head, and the right shoulder. And in terms of a corrective pattern when it comes down to the unit wave analysis. So we've got the connection between 2 perspectives over here, and the potential of seeing this chart continuing to drop down, losing strength on behalf of the euro and adding strength toward the Australian dollar is very, very large. And I do assume that we will see the same strength on behalf of the New Zealand dollar as well, as both of them are expressing strength and weakness toward the entire market with the same backup. Just that sometimes we see that the Australian dollar is getting strength in front of the New Zealand and vice versa. So we need to find whether the Australian dollar is in a position to gain more strength or the New Zealand is. But generally, we can definitely say that both of them are in a position to gain strength at the moment, as we see other currencies in other markets are losing strength. And again, we've just analyzed the dollar, and we saw that the dollar itself is not really moving in a specific direction, so we can only assume that this is a very good trade when it comes down to expressing weakness in front of a stronger Australian dollar and New Zealand dollar. The last thing that I'd like to talk about is the idea of the gold. Okay, so when it comes down to the gold, we saw the gold climbing up very nicely until 2011, reaching almost crossing 1900, and since then we've dropped down. I'm talking about approximately 50% toward the $1,050 per an ounce, and right now you can see the market climbed up just a bit and is again fluctuating around these levels. Now let's think about what's going on in the market regarding the dollar. The dollar is losing a lot of strength and gaining a lot of strength significantly, but we can't see the same movement, we can't see the same connection between the dollar and this specific gold commodity. And you have to understand that this connection is essential because it has a lot of logic when it comes down to value of the gold. When the gold is being valued with dollars, and it means that when the dollar is losing strength in the market, we should see a substantial gain, or let's say an equivalent gain in terms of measurement on the gold side. But what we can see that the cryptocurrencies, Bitcoin, Litecoin, other currencies that are being mined by the same ingredients with the same idea, we can see that they become some sort of a safe haven, the new safe haven. And we can see that disagreement or disappointment from the financial market, I'm talking about stocks, I'm talking about stock markets, we can see that while in the past we saw the gold gaining strength as an expression of weakening markets, today we can see that generally a lot of capital is being forwarded to the cryptocurrencies. And you have to understand a bit about the background regarding cryptocurrencies in order for you to understand why money should move toward that direction. You have to understand the capital being invested when it comes down to electricity, when it comes down to mining. The mining itself is a formation, is a process of using electricity and forwarding that to value, to Bitcoin or Litecoin or any other currency. And doing that, the value is being forwarded even without really pulling dollars from the US market or pulling dollars from the gold and forwarding that to other areas. And we can see this expression taking place. We can see that the gold, the connection between the gold and the dollar is lowering down, is losing strength, is losing the attachment that we had. Still, a stronger dollar will express a weaker gold and vice versa. But we can see that the impact is lowering down as the dollar is losing strength significantly or gaining strength significantly, and the gold is just fluctuating, again losing a bit of strength and gaining a bit of strength. But regardless, it's just it has less expression when it comes down to the value of loss or gain on behalf of the dollar. So in this case, we can say that we see, and it's very, very similar to what we had back in 2008, 2007. The Swiss franc was competing with the US dollar, becoming the safe haven of traders because the dollar lost a lot of strength in the market and became unstable as an outcome of the subprime crisis in 2007, the end of 2007. So in this case, we saw that the Swiss franc was becoming the new safe haven of traders. So traders pool their investment when it comes down to the US dollar or the gold investment, and they forward that to the Swiss franc. At some point later on, they changed the interest rate in Switzerland, so they caused a lot of traders to pull their investment back. But generally, we can see that it happens. We can see that the safe haven territory or target is changing according to the position, according to the potential in the market. And today we can definitely say that a lot of funds, a lot of capital is being forwarded to the cryptocurrencies, and because of that, the gold is losing its impact. And I don't want to give some prophecy over here, but I wouldn't be amazed to see banks forwarding their gold investment to cryptocurrencies, starting to penetrate that market. That won't be really a shocking thing if I'll see that happening during the next several months. And that completes our session for today. I'd like to wish you a pleasant week and obviously a lot of profits on your account. If you need any assistance, you've got our chat on our website. You're more than welcome to join our sessions. I wish you all the best. Have a pleasant weekend, and bye-bye.